You're live.
Hello, everybody, and welcome to episode 94 of Bank to the Future Live. I'm here today with Bill Barhydt, the CEO and co-founder of Abra. And Abra is one of those old school crypto businesses that is now really focused on buying, selling crypto, yield, borrowing, lending. And we're going to go through the latest with Abra. Abra is a previous portfolio company. We tried to get in some of the early rounds. We managed to get an allocation, I think, in either the Series A, and now they're on Series C. I think in total, there's been approximately $85 million raised. Bill will correct me if I'm wrong, but we're going to jump into it. Just before we do that, and before I introduce Bill, we're a few updates at the Bank to the Future. Remember, if you haven't seen the announcement, head over to the blog. On the blog and the announcement page, we talked about the importance of that October the 11th deadline, when we're going to be changing our onboarding experience due to an application that we're making with our virtual asset service provider registration and our private client securities business registration on top of our existing customers, so that we can serve a much wider audience for our retirement plan products, as well as our virtual asset services that we offer now, that our regulators call it, as well as good old school securities and crypto companies that we've been doing for the last decade or so. So make sure you check that out. Also, we've got approximately, Abra is now live on the platform for our premium members, non-US premium members for this pitch. And in approximately 24 hours or so, we'll be launching a 14-day campaign where the round was, we tried to get a part of our round. The round got oversubscribed from existing investors and new investors, but Bill managed to find us an allocation. So we are already seeing that approximately 750,000 of that has been taken up in the first few hours. We'll see how much we can get, but it's a hot property, and there's lots of competition amongst the institutional investors. But as an existing investor, Bill has been kind in finding us an allocation. So we'll see how much we can get there. As we said previously on the last episodes, our biggest challenge right now is that every single pitch that we launch has been selling out in the premium phase. So we haven't even managed to make it go public. But fortunately, with this one, we think we've got enough allocation to make it to the public phase. But we've already had 750,000 subscribed in the first few hours. So those are the main updates. I don't want to cover too much. If you saw the last episode, we went through all the different corporate actions, all the different updates with portfolio companies. And as we said, getting ready for that October the 11th switch, and exciting things ahead. So now we've done that, let's introduce Bill. So Bill, thanks for joining us, and thanks for giving our investors an allocation.
Oh, my pleasure. Always great to see you, Simon. And also, I should express my gratitude to the entire Bank to the Future community. You guys have been amazing, even patient, I should say, the trials and tribulations of startup land. And, as we're in hypergrowth mode, and it's just awesome, the response from your community. And eternally grateful for just the support.
Yeah. Speaking of hypergrowth mode, how are you guys coping at the moment? One of the things we're seeing with most of our portfolio companies is just the immense challenge of trying to keep up with the demand at the moment. We're experiencing it at Bank to the Future. All of our portfolio companies are experiencing it. Trying to onboard as many people as possible in a secure way so that it doesn't compromise the security of these innovative financial services. And just keep up with the general demand. For me, I don't know if you experience, when we have these market corrections, it's like a bit of breath of fresh air that we actually get to, really focus on some of those things, because the bull market is very exciting, but it's ruthless in terms of, the board decisions and the things you have to do and trying to move. So how have you been experiencing it at Abra?
Yeah, well, I should caveat that by saying every time you and I speak, it seems to be a fantastic day for Bitcoin. So we should probably either get paid to speak more often, or just put it in the calendar. But that aside, yeah, I mean, Q2 Q1, Q2 were very tough for us because the growth came at us so fast, so furious. We use third-party partners today for customer onboarding. So for example, if you're using Abra Earn, which is our high yield service, you're getting an account with Prime Trust, which is a US chartered trust bank. They were buckling at the seams with the volume of new accounts we were throwing at them. Now, we take a product-centric approach. So for us, priority one is that if you're trading with Abra through our brokerage, it doesn't go down. It just cannot go down. You know, we are the opposite. I'm sorry to Brian, but we're the opposite of Coinbase in this regard. I'm not aware of any significant downtime that we've ever had with our brokerage. So that's priority one. Okay. Now beyond that, everything else, you know, has to work, and we certainly didn't do a great job, or as good a job as I would have liked, in customer support during that time frame. And we were suffering with a lot of people who didn't have automated ID verification be successful. So that's probably 15% of our customers, which sounds like a small number, but given the hundreds of thousands of customers we were onboarding, it was painful. And so we fixed that. We actually went back to Prime Trust and our other partners and did more direct integration. And now very few people are waiting. The problem with people who have a bad experience, and look, I don't want to be one of them either, is that they obviously were always going to scream 10 times louder than the people who have a great experience. And it's a great incentive for me as a CEO to make sure that that doesn't happen. And it's hard for me to accept that it is going to happen no matter what I do. You know, when you're dealing with millions of people. But anyway, so I feel like we've invested very heavily in infrastructure, customer support. We've actually delayed a lot of marketing programs that we were already financially able to do even before this financing, because we wanted to make sure that support and everything else was going to be able to, you know, really provide the support levels that we wanted as we start to market Abra, which is coming now. So I would say that, you know, it definitely was a challenge. The team is 3x the size it was at this time last year, actually more than that. We'll probably be somewhere, I would guess, 250 people, not including our support team, which is in the US, Philippines, Mexico, this time next year, which could actually be 1,000 people for all I know by this time next year. I really don't know. It's just growing so fast. But the core team will probably be 250 to 300 people, I suspect, within a year, if not sooner. And so managing that level of growth. And by the way, to put it in context, we were 25 people before COVID started. And so it was pretty amazing what we were doing with 25 people, given that we had the brokerage, Abra Earn, and we're close to launching Borrow. But now, you know, we've right-sized the team since then and are growing as fast as we can. And every single exec in my team has got, you know, over 10, probably 25 open positions in some way. And I can't announce who it is. We just hired a CFO, and he'll be starting soon. And he comes from capital markets, and he's just a huge upgrade for us. I'm really excited about that. So yeah, it's crazy. So I can certainly, and I do talk to, you know, some of the other CEOs that you guys talk to as well. And I'm really happy that, you know, this seems to be a rising tide across the space. We want everyone to do well. And as I've said publicly, you know, we want to be great stewards of not only Bitcoin, but the broader crypto community, and to see everyone doing well, it's just awesome.
Yeah, it is great to see how far this industry is going, and also the valuation increases that our investors are experiencing. You know, one of the frenzies that we saw was, it's almost like in private equity, you've got, you know, ordinarily we expect our investors to experience a 7 to 10 year cycle. Because we started at the beginning of the decade, you know, the early days in crypto, the companies were just very, you know, well, you know, trying to prove the market, and we were all David trying to beat Goliath. But now the frenzy of corporate actions and the sizes of the teams and the maturity of the people that are observing and the valuation increases that our investors are experiencing right now, it really has been overwhelming, exciting, and just amazing to watch. Yeah. So just before we go into the questions, we're going to give the opportunity for our investors to also ask questions. So Azad is going to pull up a screenshot, and here is the Slido board. We got the first 2 questions there. We'll just share the link in the description, and we'll share it on the Investor Zone as well. And we'll also be posting this in the newsletter later after the broadcast. But for those of you that join us live, you get to ask your questions. So scan that link there. And it will take you over to the Slido board, or alternatively, just type in sli.do and in the box put hashtag BF94. That stands for Bank to the Future episode 94, BF94. And you'll be able to head straight over to the board, and you can upvote other people's questions. And we'll take those during the second half, or I've got plenty of questions I'd like to ask as well. So Bill, taking a bit of a step back, why don't you give a bit of a background into, many people would have seen some of your interviews, but give us a bit on your background, how you got into crypto, and the journey that you've got to where you are today to go from this scaling stage.
Yeah, it's been a long ride, both personally and professionally, but also Abra. So I've been at this for 30 years. I was working for the CIA basically as a kid now, relative to my age, I guess, in the late 80s, early 90s. And after a several year stint with the USG, I tried my hand on Wall Street. I was at capital markets, actually fixed income, mostly at Goldman Sachs, was a developer and quant in fixed income. Everybody developed their own stuff pretty much in those days. And, was working on basically interest rate systems. We called it the Hog, and which was a beast. That's why they called it the Hog. Sun-based applications for traders to basically see what interest rates, movements, convexity, duration analyses would do on complex instruments. And my specialty was distressed debt, which was very hard to price and manage, and dealing with fees around distressed debt, which was very lucrative for Goldman post LBO, barbarians at the gate craze. When that market basically was illiquid in the late 80s, early 90s. Anyway, did that for a while. Wasn't really my calling. Spent a lot of time, working on the next generation internet. Ended up at Netscape and worked on a lot of consumer internet-facing projects, from the deployment of SSL, building certificate authorities around the world so we could deploy SSL, to internet banking projects, which was really my first foray to the retail side, because I knew capital markets. So what was great about that is I had good exposure to retail banking systems, as well as capital markets oriented and trade and prop trading systems via my time at Goldman as well. And after the AOL acquisition, I really wanted to focus in on wallet and payment oriented systems, because I was really excited about the prospects of that. And this was pre-feature phone, pre-smartphone even at that point. And so, but once the handheld revolution started, that I was all in. So I had a company that was doing games for phones, which was actually wallet based. And we actually had token design. Nick Sabo, actually, this is back when he was doing Eagle, helped me there. So Nick and I have known each other for, gosh, it has to be 15 years now, at least pre-Bitcoin, obviously. And and actually segued into that, into doing a lot of work in money transfer. Ended up doing a lot of work in remittances as a result of that. So believe it or not, you go from games to remittances, and there's actually a logical progression when you look at the tech, just because of how token economies work. And the only thing that's changed now is this kind of trustless, immutable components to what we're doing, which is a big deal, but the use cases are still the same. And so for me, doing a lot of work in the remittance space led me to this idea that, hey, wouldn't it be great if I could eliminate all these middlemen who have their hand out when I'm trying to, facilitate remittances and money transfer between the U.S. and Haiti, and U.S. and Mexico, and U.S. and the Philippines. And that led to the ideas for Abra, ABRA, a better remittance app. And the idea was to build a full-fledged banking system that would be based on crypto. Now, the word crypto didn't exist. We can say crypto then because it was just Bitcoin, but based on Bitcoin, could we build a banking system? Meaning, the original idea was a synthetic dollar, which now you would just call it a stable coin, and, basically eliminate middlemen from these myriad services. Now we're going about it in a very different way than I had thought we would when we started the company. We're definitely focused more on the wealth management aspect of banking right now. But I can assure you that payments and money transfer and everything related to that are going to come full circle for us. I should also mention that a lot of the people watching this won't know this because they're wealthier. A lot of our developing markets customers actually use Abra in cash today. So we run cash teller networks in different countries that probably accounts for, I'm not sure, I have to look up the number right now, maybe anywhere from 10 to 20% of deposit volume on any given day. Literally people walking into a retail outlet with cash, some cases it's a remittance center, dropping down the cash and leaving with Bitcoin on their phone. And other than services like Paxful, which are more peer-to-peer, because ours is highly regulated, meaning all of these retail partners are licensed money transfer entities in their local markets. We're the only company in the world that I'm aware of that's doing that. And so we have wealthy customers putting millions of dollars into their Abra wallet to earn interest. And we have poor farmers in Guatemala putting $10 in their Abra wallet to earn interest. Exactly the same app, 100% the same binary download. And I don't know any other service in the world that can make that claim. And that's something that we're really proud of, and is also very relevant to my background and how I got here. It's just really gratifying for me because, I started this for very noble reasons, and I want everyone to make money. But when I say everyone, I really do mean everyone. And that democratization of access to financial services is personally a key driver for me. And I don't want just the wealthy. I'm happy for the wealthy to get wealthier, but I want everyone to have access to the same services with Abra.
Yeah. And what we have seen over the years as well is the new class of wealthy that weren't wealthy but got wealthy because of crypto. So, the definition of wealthy is changing as well, and that's because we're involved in one of what I often call the world's largest redistribution of wealth. People decide at what stage they're going to get on board this market. Depending on when you get on board in that, you have a different wealth effect. But I'm sure you're with me when you say that this is just getting started, and we're all tending to go full circle. We end up in a niche, but really plugging all of our different services together, we're ending up with an entirely new financial system and the reinvention of what would be defined as a bank. And so bring that up to date with what services Abra is mainly focused on right now. So if I want to use Abra, what are the main things? Where do you see the big growth markets, and what are most of your clientele doing, whether they be the ultra wealthy or those that are using it in order to get wealthy?
So we have 3 services live today, 3 buckets of services, I should say. The brokerage, which is Abra Trade, our investing for yield, which is Abra Earn, and the lending service, which is Abra Borrow, which allows you to borrow USD stablecoins against your crypto holdings, effectively borrowing dollars, similar to a prime broker. So all 3 services are doing great. All contribute to the bottom line directly with a positive margin contribution. We're managing close to 10 figures in deposits. I would be surprised if we're there this week, just given the increase in the value of Bitcoin. A lot of our deposits are obviously in crypto. Some are dollars, but the mark to market of the crypto price affects the AUM. So the brokerage trade allows you to buy and sell up to about 140 different cryptocurrencies. But what's really interesting about it is it's very simple. You can go from any crypto to any crypto, meaning you don't have to go to dollars first. And that's very unique. And we manage the conversion on the back end across our trading partners that you basically have signed up with when you sign up for Abra. And I love that. And it's a really, I think, cool feature. And a lot of folks watching this will be outside the US. You actually have more crypto access than your US counterparts, whereas the US tends to be a little bit more conservative in listings. And I suspect that'll be the case more or less indefinitely. On the Abra Earn side, we're doing a really good job on the yield front. We pay about 8% right now on dollars and 3 to 5%, I think, for the other cryptos, just depending upon which crypto and what's happening in the markets. And I think we've done a really good job on the risk management front, and I'm happy to answer any questions folks have about that. I talk about that all the time on Money Talks and other venues. We also have just launched the retail part of Abra Borrow, which is now growing fairly rapidly. And we have a first of its kind 0 interest option there, where you can take a 10% LTV loan against Bitcoin and Ethereum holdings effectively for free. And I don't know anyone else doing anything like that. So that's a really cool product. Now, all of this is complemented by the institutional side of our business, So we have business clients that are trading. We run an OTC desk now that can service large bulk and volume trades. We have institutional clients for treasury funds that are using Abra Earn to earn, if you're sitting on tens of millions in dollar deposits and you don't want to keep all of it in a money market account, you can earn 7-8%, or in some cases higher, on dollar deposits into Abra Earn. And so we've been managing this for funds, mid-sized business treasury, et cetera, et cetera. And we do institutional lending, obviously, to generate yield for some of the retail depositors via our Prime Trust partnership. So all of those business and retail services work in concert effectively to what amounts this kind of crypto banking model for Abra.
Yeah. So help us understand a bit for those that might be new to crypto lending. So in your traditional financial services, somebody that doesn't have the purchasing power would go out and they'd have a credit rating. The bank would try and assess the credit risk, and then they'd issue them a loan. And it's driving what I always talked about, the debt-based economy. In Bitcoin, we have more of a collateral model, which is where if you have assets, you can then borrow against those assets. And it's a very different effect, different model. But help people understand, like, where does this yield come from? And why does it achieve such a higher yield than you can get in the traditional markets?
So people have this misunderstanding that this is specific to crypto. It's not. So if you are a high net worth investor with a brokerage account in the equities world, they'll actually give you, in many cases, a debit card, or it looks like a debit card, but it's not. You're actually getting instant credit access against your equity holdings. And the amount of credit they'll give you is proportional to some LTV level internal calculation versus the equity holdings you have with that brokerage. Sometimes it's part of a prime brokerage service, sometimes it's part of a high net worth wealth management system, but it all effectively works the same way, right? Meaning if the stocks tank that you're borrowing against and the LTV rises to too high of a level, they'll automatically sell, and you don't need a capital call or make a payment on the debt. They'll actually sell the stocks to put you back in compliance with whatever their requirements are. And effectively, on the retail borrower side, it works the same way. And by the way, that should give you some hints as to what might be coming next from a product perspective for Abra. So the yield works the same way. So when you borrow, so the job of a prime broker at an equity house is to severalfold, but one of them is to make money by lending the stocks. Now, in most cases, the interest earned on that lending goes to the broker, not to the investor. There are some instances where the investor is another brokerage and they negotiate, to my understanding, a big piece of that interest payment, because why should Goldman get all the money for lending, let's say E-Trade? I don't know if it's E-Trade is a customer of Goldman. Let's just say they were. I made that up. Why should Goldman get all the money and E-Trade will negotiate a piece for themselves? But Abra is doing the opposite. When you deposit crypto with Prime Trust and we hypothecate that crypto to lend it, the vast majority of the interest goes to the depositor, the person custodying the crypto with Prime Trust. And so that's kind of the opposite of what a prime broker would do. But the model is basically the same, right? They're lending the equity. So we didn't invent this model in the crypto space. It's just we've applied it. And because this space is growing so fast, and because via the Prime Trust model, we've figured out how to make it available to every aspect or every piece of the socioeconomic spectrum, it's getting exposed to people who traditionally are unfamiliar with this model in the equities world.
Yeah. Well, we're seeing that generation that we're never going to get involved in traditional financial products because and the crypto market has hit their imagination, and so they're seeing financial products for the first time, but done on the crypto markets, and they didn't even engage or participate. They leapfrogged the traditional markets, and I think that it really is a trend, because that's what the products that the younger generation are going to be getting on the future products. So that's why my thesis that we are just at the beginning And many people might think that, if you had to be involved in the early days, I still think these are the early days. So it's a great and exciting time.
Yep, totally agree.
So let's cover the elephant in the room. And I know your compliance team might be shouting at you saying, "Don't say that." But
You're talking about my dating life?
Yeah,
Yeah.
the
No.
So Coinbase has obviously been told by the SEC, and they've shut down their lending service. One of our portfolio companies, now public, Celsius, has been been contacted by a couple of state regulators. I noticed that you have a model where you say you're going through prime trust. Is there some kind of significant thing? And again, I don't want you to have to discuss any kind of competitive advantage or anything that's going to get your compliance team, but help us understand, is Abra about to have the same fate, or is there something you've been doing that you think might get you through what some of the other companies are experiencing right now?
Yeah, sure. So I'll give you my opinion and perspective on this, and I'll caveat it by saying I'm not a lawyer, I'm not a securities lawyer. I seek advice regularly from our securities lawyers. We have different firms that we work with for different aspects of this, and they're better at explaining it than I am. But they're certainly not going to come on your show, or as much as I would love them to. But so I'll give you my layman's perspective, even though when I say layman, it's somebody who obviously has spent a lot of time on the topic. So we don't issue accounts directly at Abra. Let me start there. Right. So when you and I'm talking about Abra Earn right now. When you go to the Abra Earn screen in the app for the first time, the first thing you do is you apply for an account at Prime Trust. And when we launched Abra Earn, or I should say, long before we launched Abra Earn, a couple of years before, I believe, going back, we knew that the best model for this was going to be to do it the way a bank would do it, which is to pay interest as a bank. Now, we're not a bank, at least not yet, and we wanted a partner that was crypto friendly, that was comfortable paying interest and could do the legal work to say, hey, you can do this. Okay. And the logical partner for us was Prime Trust, because they were already working in the crypto space. They had a trust license. And they had a lot of different customers, partners in the crypto space. So we approached them. I think it was about a year before we launched. I don't know the exact date. Explained the model to them, thought it was interesting, and immediately it was like, okay, we got to get legal and compliance on this, and we'll take a look at it. And after many months of going back and forth, they basically said, we're comfortable with the model, and I don't, there's other details between the lawyers and some documentation that goes on and documenting, legal opinions and whatnot, and they got comfortable with the model, right? And so today, when you use Abra Earn, you sign up for the account with Prime Trust, you go through their KYC process, the app actually forwards the details to their systems, they approve you in real time, or it goes to the back office for approval, and then effectively their system is paying you the yield on your crypto, custody crypto, whether it's dollar stable coins or Bitcoin or whatever. And I'm comfortable with that approach. Now, do the regulators all agree with us? By the way, my opinion is these are not securities, just to be clear. Now, there's two parts to my response to your question, therefore. One, do the regulators agree that, paying, opening an account at Prime Trust and paying yield on crypto through that model works? And do they agree that these are not securities? Honestly, I don't know. We're confident in our opinion. We actually talked to states, including states that have, had issues with our partners, and we've never actually had any specific concern voiced by them with our model. But time will tell. But I'm very confident in the opinions of our lawyers, who have made both cases that I'm claiming here, and will continue to do so. I also very disappointed that the SEC is making a lot of blank statements publicly. And I'm talking obviously, but this is a US specific thing. Well, it's all US specific really, because none of the other countries we're dealing with really have this issue. But it would be better to have a framework for basically saying, okay, there is a way to get some type of no action letter if you're doing this, and this, rather than just saying, 80% of these things are securities and we're going to come after you eventually. It just doesn't help, right? It doesn't help. First of all, none of our retail consumers are saying, Mr. SEC, please help me get more protection. That's not why people are using crypto in the first place. It's not, okay? That doesn't mean that we shouldn't follow the law. We should. But on the other hand, when you're dealing with 1930s and 1940s regulations, which predate computers, predate the internet, predate smartphones, predate crypto, it behooves you to basically dig in and be more concrete with your guidance as to what is a security, what's not a security, how you can help the ecosystem. Esther Piers has been probably, as a commissioner, the most forward thinking about this in terms of creating sandboxes and taking a go slower approach. But it has not been helpful the last few weeks, and Abra is going to basically keep plowing ahead until the lawyers tell me otherwise.
Yeah. And this is where the collaboration of the industry, at Bank to the Future, we took the securities route a decade ago, and we've utilized securities laws to try and support the industry. Companies like Prime Trust and Partners, they've got the trust and those types of regulations, and they're supporting the industry. And at some stages there are, confusions along the way. But at the end of the day, the ecosystem is now building where combining these different companies that have been focusing in different areas can actually plug together to build all that financial system. And unfortunately, that is one of the things that if you're investing through Bank to the Future, you do need to be aware of, that there is a myriad of things that change very fast in our industry. We try to make as many disclosures and help people understand the risks. But regulatory risks is one of those things where when you're innovating in finances, you're gonna encounter challenges along the way. As a sector, as an industry, we tend to overcome them, but sometimes you have to have that longer time frame and allow a business to adjust to some of the challenges that they might be facing as they try and balance that tightrope between regulatory compliance and financial innovation. But the industry grows more and more each year, and so that's a challenge for our whole industry and part of the territory if you're investing in a high risk, high return sector like private equity in financial technology companies.
I'd also say, look, if I asked my lawyers, hey, I do this show Money Talks every Friday morning, and I pretty much answer every question asked, unless they're repetitive, but should I be doing that? And I guarantee you the response will be, please stop doing it, right? Please shut up. Mm-hmm. And that's just not going to happen, right? So I think that, and we need more of this, to your point about disclosures, and not just the legalese and having the terms of service. That's important. It has to be done correctly. There has to be a legal document that a customer can refer to say, okay, what am I agreeing to? What are Abra's obligations or my obligations? And that should be documented correctly. But I do think in a space that's so early, it does behoove us to have informal channels that we can refer to feel comfortable that these companies have our back. And I'm not bragging that Abra is the only one doing this. I want everyone to do it. And I would like, for example, to see Brian do this. It's not his comfort zone because he's a very introverted guy, and I like Brian, but he needs to get out there more and have those kind of conversations. And so I'm committed to doing it, and I wish everyone else in the space would do it as well. And we'll see what happens. But I understand that the lawyers may not like it, but again, our customers aren't saying, lawyers, please protect me. SEC, please protect me. Again, we should follow the law, including securities laws. But first and foremost, we should do right by our customers.
Yeah, and I don't want to go too deep into regulations, but if regulations were just investor protections, then great, but half of them aren't. Half of them are investor unprotections because they need to have different government agendas.
Call it what it is. It's bank racketeering right now because effectively they pay the bills. follow the money, right? And they need to be protected. And, Elizabeth Warren and that whole crew is going to protect the banking system at all costs. And, a lot of my progressive friends here in SF are going to roll their eyes when I say this, and they do when I talk to them and explain it, and it's fine. Time will tell whether I'm right or wrong. And I've been at this long enough. I wish I didn't have as many gray hairs as I did. I have enough gray hairs to know when I'm full of shit myself, and I'm pretty sure that I'm not here.
So Bill, let's switch gears into things away from compliance and regulations. We have to deal with that 90% of the time as a board member of a
let's make it fun.
Financial institution. Tell us about your experiences being able to present Abra and your solutions alongside two of my people that I'm very fond of, Tony Robbins and Ray Dalio. Ray Dalio, I've learned so much from in the traditional markets and love his book Principles. And Tony Robbins was actually somebody I proposed to, the co-founder of Bank to the Future, my wife Bliss Dixon, on his stage as well. And last time we spoke, you mentioned that you were actually presenting on the crypto side. So share your experience with having presented with Ray Dalio and Tony Robbins, and what you're up to in Abra.
Sure, I'll tell you the story. What happened? So, like I mentioned, we have a lot of high net worth clients now, and we have a lot of clients in developing markets. And some of it turns out, unbeknownst to me, even that's a lot of our high net worth clients were clients of Tony's. Some of them are well-known people. I can't, obviously, for privacy reasons, drop the names, but he found out about this and said, I think basically the discussion was, who is this guy? Who is Abra, and how are they managing to do this and sign up all these people? And it was word of mouth within the community. And so he and I started talking, and we did a couple of Zoom video chats together, and he's exactly the same one-on-one as he is in all those videos that many of your viewers, I'm sure it sounds like you've seen. Big booming presence, and actually asked a ton of detailed questions. Like he knew the basics of crypto very well. I was not educating him on the basics of crypto at all. And as a result of our conversations and his own testing, he asked me to present to his Wealth Mastery, his Platinum Partnership, which is like 400 plus of his highest net worth clients. And this is all public information. And now it turns out that at the Platinum Partnership, I went to the studio there. By the way, this is the coolest, most amazing virtual studio you've ever seen. It's a massive stage with like 100 monitors set up. So the background isn't this bookshelf you see behind me, it's the actual audience. And they're jumping around, interacting. I mean, it is the best thought through virtual audience system I've ever seen. So I got to present right after Ray Dalio. Dalio is up there talking about how the 60-40 allocation is dead. I'd rather own Bitcoin than bonds. Now, this is a few months ago. He had never publicly talked about owning Bitcoin before. He had said it was interesting. They had published the research report, but he never talked about owning it. Never before this had said that he owns the Bitcoin. And that was the first time that these high net worth investors heard him say, and you should probably own some Bitcoin, which the exact words he used. And I got to present after him and go, hey, oh, and by the way, here's Abra, here's how you do it. I agree with everything Ray Dalio said. We're in the late stages of a debt cycle. It could be Bitcoin gets us out of this mess without war for the first time. And here's how you do it with Abra. And it was awesome. Right. So, yeah. I mean, I didn't know that was going to happen. They did not tell me that we were going to be effectively presenting together. So that was really cool. And then I think Peter Diamandis went up after me, and he's actually since joined our advisory board. And I did a webcast with Peter Diamandis and Michael Saylor a few weeks ago. And now Michael and I have gotten to know each other, and he's talked about how Abra's borrow service for consumers is awesome because you can, continue to hold Bitcoin and borrow dollars. And so it's really just led to a great windfall of awareness for us. And I'm just really grateful that they took notice.
Yeah, I'm very jealous. So hopefully one day I'll be able to follow up on all the good work you've done introducing Bitcoin to these other parts of the world and the traditional finance and the personal development as it collides with the crypto world, which is where we are right now. So awesome work putting that through and making that happen. All right, so let's try and pick out some of the audience questions, Azad. In terms of the actual pitch, we've put together the presentation, the numbers and everything. Those are the qualifying members of BnkToTheFuture.com in approximately 24 hours from now. If you're not a premium member, if you're a premium member, you would have received a notification about the Abra pitch. And if you're not, then if there's any allocation left, then in 24 hours from now, it will be on the platform for approximately 14 days. But remember, in overfunding, it can close at any time. So, it's once it reaches that funding goal. So there's the pitch, and it will be available in 24 hours. And you can catch up on all the details there, and you can go to the investor zone, ask any questions that you might want to ask. But let's now move over to the Slido board, and let's see what the audience have for us. So Azad, what's the first question?
Okay, first question from Anonymous is, what valuation increase have investors seen here since 2019 funding round?
Yeah, sure.
So Bill, do you remember the numbers? I think we the last round was a note, I think. Could you share a bit on the valuation history?
Sure. So the notes convert at the Series C price with the discount in the note. I don't remember what your actual discount was. So those folks are getting, obviously an amazing price. I think there was a ceiling on the note conversion. So you're actually below even the discount. So I think you came in at the ceiling since the valuation jumped so much from the Series B. I don't remember those exact numbers. It's been like 4 years since we did all that stuff. The Series B, and then 2 years since the notes. So I don't have those numbers in my head, but obviously the site has the details on the Series C price details. So it's a very nice jump. Already the folks who were in on the notes are getting a big bump in valuation because of the ceiling and the conversion price. So everyone should be pretty happy there as well.
Okay. Next question.
Okay, next question is, what is the ultimate goal for Abra? To go public, security token, buyout?
Well, let me give you the kind of macro perspective on what I would call crypto banking, and then we can talk about public company versus acquisition after that. I think that this whole kind of crypto banking space as it relates to traditional retail is just emerging now. And the idea of lending dollars against crypto holdings didn't really exist 4 years ago. And at least it did for hedge funds and for prop trading, but not really for retail investors. And so, and lending licenses weren't even available until recently for this topic. So this is all new, but it's growing at an unbelievable rate. Now, my opinion is that as this space grows, you're going to need a lot of staying power. Now, we've raised a lot of money. I should also mention we've been profitable most of this year, going into late last year. We may go cash flow negative a little bit as we invest heavily in growth. Although honestly, up until now, we haven't been able to because we haven't been able to hire fast enough to actually make that happen. So, but I suspect with marketing spend, we may be at break even for a while, even while we're growing. So, but that having been said, I think that to be a long-term sustainable company in this space, you're going to need to do a lot of public disclosures, have a very big balance sheet, and you're going to have to be compliant globally. And I think that's going to lend itself more to a public company model than to a private company model. Goldman may have been the last holdout from the old banking days where you could get away with that. Now, legally, of course, you can do this as a private company. I just think that it's going to be, how would I say this? You're going to have a better chance of success doing this as a public company long-term, in my opinion. So that's my kind of trajectory for Abra. Now, that having been said, whether you go public via traditional listing or IPO or security token in the US that's publicly tradable, it would have the same disclosure requirements as a listing, more or less, right? Depending on how it's tradable. So, they effectively amount to the same thing. Look, if some big public company came along and, it was just too good to pass up for the growth of Abra and the long-term viability of the company, I'm probably fiduciarily bound to consider it, but we're certainly on the former trajectory, in my opinion, and we'll see what happens.
Yeah, and as with all investments on Bank to the Future, they should be seen as long-term. One of the observations that we've seen over the years is that, having been involved in crypto, when you give people liquidity, they tend to sell too early,
Right.
and they don't ride out the whole thing, because in general, investors, they tend to do. One of the great things about private equity is when it's less liquid, you're forced to hodl. And so we have seen incredible wealth being generated by those that were Bank to the Future investors in the early days that are now starting to see those paper valuation increase. Along the way, they were whinging all the way that they couldn't trade it or they couldn't do anything with it. We created the secondary market to facilitate those that are not in a position to be able to hold it any longer because circumstance change. But what we have seen is the true wealth effect has been from those that invest and really have a longer term horizon, and by being able to facilitate liquidity, we've seen that people aren't forced or able to hodl as long to get the really big wealth effects. And we've seen that just from firsthand empirical evidence of looking through the performance of 150,000 investors that have registered on our platform, and seeing the results. So that's one of the things. Always think of this as a long-term investment in that. Next question, Azad.
Yeah. Will the equity investors also receive CBT token? This will be a great incentive to invest even more in this round.
No, you will not. I need to be clear about this. And I should also say, I can't really say too much publicly about the reference to CBT in the doc because the announcement hasn't been made yet, but it is not a security offering. We're not selling anything. There's no plans to sell a token at Abra. Anything we do regarding tokens would be relative to your usage of Abra. So if anything, you want to start using Abra right away, because when we start making announcements, and CBT is a placeholder name for something we might announce soon, wink, wink. So I would encourage you to start using Abra right away to get those benefits. But to be clear, we have no intentions of doing anything related to any kind of security token or security offering, via the Abra app itself.
Next question.
H3 asks, do you have data on your demographics? Where would you say you are seeing the most growth?
Sure, yeah, we do. We have a lot of data. We're seeing growth all over the world, but I would say really comes down to three areas predominantly. I would break it down into the Americas, Europe, and certain developing markets. So US certainly leading the way from an AUM perspective. In the US, we get much higher deposit volume per user. UK, the pound deposit per user is also very high. Canada is growing, but we don't have Abra Borrow live there yet, working on that. And so hopefully that'll be able to launch there soon. Certain developing markets for us are also killing it, like the Philippines, Guatemala. We just launched in El Salvador. We're already seeing numbers there. I think certain parts of the Middle East and India also doing very well. So yeah, I mean, it's a good global footprint, but certainly the US has been outpacing on deposit per active customer, and the sheer numbers of users have been overwhelming in developing markets, especially where we have the cash networks.
What is the latest with the SEC news from 2020 and the settlement?
Yeah, there's nothing new there. We have had no interaction with them since the settlement. It's all done. It's in the past. Those products don't exist anymore. I wish, so there's nothing else to report.
Okay, Prisoner Zero asks, with the news around BlockFi, could you speak at all about similar risks to your business?
So I think we talked about this right up front via Simon's question. I don't know if there's anything else you wanted me to add, but I believe we've addressed this already, right?
Yep.
Okay, H asks, within the bounds of the relevant terms and conditions, is there perhaps a way you could incentivize users to leave reviews to balance out the brutal ratings you seem to have on Trustpilot, etc.?
That's a great question. I addressed this in the forums. Very disappointed with Trustpilot's unwillingness to address the scam reviews via ACH fraud that we've seen. By the way, I've had the same issues with Apple and Google for 40 years. But that having been said, I would never pay a user for a review. I understand what you're trying to accomplish here with people who are legitimate, but I wouldn't do that even if they were legitimate. And so we'll just have to figure out a better way and hopefully incentivize the people who are using the app, who are having a great experience, to dilute those horrible scammers because they want to be part of a service that has those positive reviews. Now, the good news is that's already happening on the app stores, right? The scam reviews have been more or less diluted away now. And if you look at our ratings there, they're very high. A few of these sites that don't get huge volume, we're still having that issue. But internally, I can tell you that our CSAT numbers are growing, especially since we've tripled the size of the support team. And our NPS scores have always been very, very high. We've tracked NPS scores more or less from day one, and I think we're at about a 65, 70%. And by the way, certain US banks have a negative NPS score. That is possible, meaning for every customer you add, the worse your word of mouth gets, if you even think that's possible. And most people are shocked when they hear that. And so Abra's NPS score relative to the banking system is actually off the charts. And we do track it pretty regularly. And we'll continue to push the envelope on this, but we wouldn't pay for a review for sure.
Is Michael Saylor partnering with Abra?
Well, Michael Saylor is coming on Money Talks on Friday, and it's going to be really interesting. So I would strongly encourage everyone to listen in and hear what he has to say.
Will the equity investors receive CBT token?
I believe we've addressed that already.
Okay, it's another similar question. Yep. Here we go. Did you ever cross paths with Edward Snowden during your time with the CIA?
Unfortunately, I'm much older than Edward, so I'm pretty sure. Do you have any guess as to how old he is? I think he's in his 30s, right, or maybe early 40s. I'm guessing he was in grade school when I was at the CIA, if not younger. So unfortunately, the answer would have to be no. And even if he did, we did very different things. So yeah.
Okay, looks like we got through. Is there one more question? I think we got the.
There's one more. There's one more question, which is what is happening October 7th?
Yeah, so for those of you in Europe, I'll be doing one of the keynotes at Token 2049, and very, very big announcement coming. This would be let's just say an opportune time to start making deposits into Abra. And the announcement on October 7th will definitely be making it worth your financial while. So I'm not going to give it away here, but it's something that I've been working on with the team for a very long time, and is definitely one of the biggest announcements we've ever made. And I'm not going to spill the beans, but this would be a very good time to be starting your deposits into Abra.
Okay, and October the 7th, we should be a couple of days left on the pitch if it hasn't all been subscribed. So that's great to see that. Bill, thank you very much for answering some of the more challenging questions, and also sharing your story and the Abra story. It's great to be a part of its growth. Any closing remarks you'd like to leave people with, and we'll put this up over on the pitch. And if people have more questions, then the discussion forum is available for qualifying investors that have accounts on Bank to the Future.
Yeah, I'll check the forums pretty regularly to do follow-up answers. My DMs are open on Twitter, and people probably know how to find me on email anyway, but keep the questions coming. Happy to answer. It may take me a day or two to get back. I'm drowning right now, but I promise I will respond. And I'll just reiterate my gratitude to you and the BTF community. You guys have always been, and gals have always been great to work with, and love the support. And on behalf of the whole Abra team, thank you very much.
Okay, awesome. That's going to do it for this episode. Bank to the Future live episode 94, approaching the 100. If you missed the beginning, you can rewind, but check out the announcement page on our blog. We have some important deadlines coming up where we will be changing the onboarding experience to stay up to date with new regulatory requirements and exciting new products that we're launching to separate out the securities side from the virtual asset side. And we look forward to sharing more and more of that as the retirement plans go live and all the other products. Yeah, we will see you this time next week on Bank to the Future Live, episode 94. We've got another 3 pitches going live this week, another 25 corporate actions from companies that are killing it at the moment, just like Abra. Then we'll be going through the pitch quiet phase, where we'll then be working on the new retirement plan products that over 20,000 of you have been on the pre-registered list in order to get more details on. We put through the first 10 beta clients and some of our more high net worth investors. So we're really looking forward to rolling out, and we'll see you this time next week. Thanks, everybody.